Good morning, everyone. This is Brad Matheny. Today's September 29th. It is 11 a.m. in California. This is another quick behind-the-scenes look at what it takes to build strategies, good strategies, and how to improve them. So over the past couple of weeks, I've been working with this one strategy, and let me drag these out of the way to show you. This is what I call my TTScanner strategy. This is the intraday strategy, focusing primarily on the MNQ, which is the micro NASDAQ. It would perform equally as well on the NASDAQ. And what we're looking for is we're looking to contain risks and produce very solid returns. So you can see in this area here, this upward trending. There's actually two of them running on this chart. But the idea here is I wanted to see how I could coordinate and contain risks to develop the best performing strategies. So now what I've done is I've set one of them up relatively conservative. Drag this a little higher, move it over here, and I've set one of them up a little more aggressive. And the purpose behind this is to show you, once my system moves fairly slowly, remember this is running a bunch of data in the background, the difference. And what we're looking for right now is look at the primary differences. Now, obviously, this one made $3,700 over the past 2 months, roughly, and this one made $8,400. Okay, so now understand that this is a big difference. This is more than double the difference in total profits. But you have to really dig down into the numbers to see what's going on. So notice here the gross loss was $1,600 versus the gross loss here of $3,900. Notice the max strategy drawdown here of $1,500 versus max strategy drawdown of $849. What you need to be aware of is the fact that when you look at these max strategy drawdowns, I've always told clients you need to triple this number to understand how much risk you actually have in the system. So now the percentages are skewed because of the actual starting value, and I can fix that by coming into here and here, and hypothetically fixing our starting value to 10,000, and coming over here and fixing our starting value to 10,000, and theoretically these numbers should adjust. So still got the same profits, but return on account here is now multiplied because of what we've been capable of producing and calculating. And the same thing over here, return on account is higher. But let's stick with the actual metrics of what's going on here. So the profit factor on this system is 3.12. Profit factor on this system is 3.32. Not a big difference when you get right down to it, right? Well, in a way it is. So now if we come take a look at this and we look at the graphs, we'll go to the equity curve and drawdown. You can see here that we've got, over a period of time, we've got a drawdown of close to $750, whereas over here we've got a drawdown of about $400 max. So this is double the drawdown over a period of time. And again, with regards to accuracy, we have a 66% accuracy over here with a roughly a 1.5 to 1 ratio, winner to loser. Here we have a 49% accuracy, which is not so great, but we have close to a 3.43 right here, average win-loss, 3.43 to 1 win-loss ratio. So again, you need to understand how this works. With a 66% win ratio, let's call that 7, basically 70%, I'm going to have 7 trades that make $144 each trade, and then I'm going to have a little over 3 that lose $95. So I'm going to make about $900 roughly, $850, $900, and then I'm going to lose 350 out of that. So I'm going to end up making $600 roughly out of every 10 trades. We have $129 trades. So that gives you an idea of how this is going to perform if this metric stays. In this system, I've got a 49% accuracy. I've got less trades, but that means that I'm going to have 5 trades that make $180 each. So do the math real quick. That's 5 plus, if I do the math right, that's another $300. So that's $800. And then I'm going to have 5 trades here that lose $50 each, about $250. So I'm going to have $800 on the winner, $250 on the loser, and I'm going to have essentially a net of about $600 per 10 trades. It doesn't trade as often. It doesn't have the risk that we had. Largest losing trade, 183. Largest losing trade here, 262. But understand that the metrics for the system are going to produce a more consistent overall return with this strategy, which is why when you see the graph, you can see here on a close-to-close basis, it's consistently, it doesn't trade as much, but it has a very consistent drawdown ratio, as you can see, and it just chunks out money a bit more efficiently than this system. This system produces more money, but has these broader drawdown periods, which present an issue. And you have to understand that these drawdown periods and extended periods of time can be 2 or 3 times the normal or the projected range. So when we're looking at this, we need to understand that this system performs aggressively, very aggressively. And ideally, if you take a look at the periodic analysis, I'll try to put these side by side here so you can see. So these are basically the same days. This system made $454 hypothetically today. This system made $317. This system made $440. This system made $178. This system made $120 or $298. This system made $583. The system made $290 here. The system made $1. The system made $103. This was nothing. And again, this is very restricted. What you're going to see here is on a week-over-week or month-over-month basis, you're going to essentially see that the losses on this system are going to be smaller than the losses over here. So yeah, we had let's come down here. So we had a loser here of 74 versus 342. We had a loser here of 5 versus 1,200. This was a big day, 21. So I don't know why this one didn't take a good trade. I'll have to look at that. It probably didn't fall within the restrictions. This one, long and short of it, is it produces less results over here, but has less volatility overall. And that's, again, something that we want to look at from a standpoint of total volatility. So here we have the an example of outliers and run-up drawdown. Let's take a look at this real quick. So outliers and run-up drawdown give us the ability to see pretty much in line here, right? Except the outlier profit loss here. This one had a much bigger profit loss than this. And you can see here the run-up versus drawdown, max run-up versus max drawdown. We had a $1,800 run-up versus a $591, and here we had a $1,392 and a $591. So this one's got a little bit different days. The drawdown day was the same day, ideally, what I'm trying to show you is how you can set a strategy up to be aggressive, to try to capture as much trade as possible and be super aggressive. But remember, you've got to watch that max strategy drawdown level, make sure you can handle 2 or 3 times that level, or you can be super conservative. Now, ideally, what I would prefer to do is, because of this drawdown and because of what it does, This system produces fairly consistently with very low drawdown, and I would prefer to run a portion of capital with this and then a smaller portion of capital with this. So hypothetically, I would run this system, but I would be a little bit cautious until I got up above, say, a $3,500, $4,000 profit, for the simple reason that I want to make sure that I can handle that drawdown factor with this system, whereas this system has very little drawdown. And that's going to give me the ability to continue to run this system with very little risk for maybe a month or two or three until both systems perform enough to handle the risks that are applied to those, playing with the house's money. That's going to give me the ability to then run the system, have less concern about the risk factors because it's mostly profit that I'm risking right now. And as long as I manage the systems well enough going forward, then I can start incrementally increasing the contracts that are trading. But again, the purpose behind this is looking at a system, looking at the metrics, and looking how it performs. Now, I also, honestly, I love to come into the into here and look at these periodic analysis tables because I love to play around with these numbers. I love to see these numbers to see how consistent they are. You've got 43 trades, 76% accurate, 86 trades, 61% accurate. Over here, you've got 23 trades, 52% accurate, 38 trades, 47% accurate. Now remember, I haven't tuned these up. These are just showing you examples, but ideally, this is taking basically one trade a day, if that, maybe a little over in here in September. And this is taking hypothetically about 3 trades a day. So there's a big difference in how much it's trading and how often it's risking capital. This is basically a very conservative, get me in and out, try to find the best trades. This one is saying, hey, let's open it up, let's take some advantage, and let's try to rock it a little bit more. So ideally, when you're looking at a strategy, you want to understand how much risk you have in a system, because I can't tell you how many times I've seen people look at these results, look at something like this, and turn around and go, wow, that looks fantastic. Or here, wow, it looks fantastic. Let's turn it on. And then have the system roll into 6, 10, 15 days of this that they never expected. And that's why you have to be cautious of where you're at, where the drawdowns are, and understand that you could turn the system on and you could go through 2 or 3 times this drawdown right away. So you have to be aware of where it's at, what it's doing, and where you have the capability. All right, guys, that's it for now. I'll keep you updated as we go. This is likely very close to being tested, like possibly next week. It's fully automated. I'm probably going to turn it on in a dummy mode next week, see how it performs, see if the new protection mechanisms work. And then if it does, maybe close to November, I'll be ready to offer it to you guys as an opportunity. It tends to work with almost anything. I mean, it's not perfect, but if I come back over here, I'll do a MES, pound F. This is my goal, is to be able to build something that works in any market, in any environment, be able to turn it on and let it go. So ideally we have here, show the backtest report, and here we have the MES backtest report. This is the aggressive system. It produced, real quickly, $5 a point and 10,000. It produced $2,400 over a roughly 2-month period. And the conservative system is a little flatter. It had a little bit of a sideways move. You can see here, let's come in here, 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 here. This produced $1,200 over a 2-month period with the MES. Now, the MES, like I've mentioned to you, is one of the most difficult things to trade. It's very finicky in how it moves. MNQ is a lot smoother. Let's take a look at the metrics real quickly. 56% roughly, and we've got about a 1.3 to 1 ratio, so that's still acceptable. This one is a 46% with a 2.2 to 1 ratio, still acceptable. Largest losing trade, let's go take a look here at the strategy drawdowns. So we have a largest strategy drawdown of 1,000, largest strategy drawdown of 1,000. Obviously, if the strategy drawdowns are similar, then we're going to pick this system. It produces more. We have risk factors, taking a look at the drawdowns. We have risk factor of about 200 here. We have a risk factor of about 200 here. So the primary difference between these two systems here is again, you have this chop here over a period of time before it starts to accelerate. You have less trades, so we have to take a look at the total trades. And otherwise, the primary difference is 115 versus 58. This is a more contained system because of the 2 to 1 risk-reward ratio versus the 1.3 to 1 risk-reward ratio. Profit factors are going to be similar. So if we come down here and look at profit factor, oops, right here, 1.67 versus profit factor of 1.85. It's very similar profit factors. This one just produces more, and all we have to do is be able to withstand roughly a $2,000, $2,500 drawdown. So ideally, this would be producing about 250 a week. Let me rephrase that. That is about 1,200 a month. So yeah, about 250 a week. And this is producing about 150 a week overall. There is no benefit in one versus the other simply because the profit factors are very close. Even though this is almost a 2 to 1 risk-reward ratio or better, it just doesn't have the, it would be better, let's put it this way, it would be better if we had a higher accuracy rate. If we could get this number, this 2 to 1 accuracy ratio right here, if we could keep that and get this accuracy ratio up to say 60, 65%, then we now have a system that would be probably more successful in the long run and more susceptible to producing stronger returns than this system with regards to drawdown. All right, we'll get into other things later, but I'm just trying to show you as we go. So pay attention, and like I always keep reminding you, come over to live trades, take a look at what's going on in live trades. You're getting some really good signals again. Let's take a look here at, let's go to the 2X ETFs. Pure Alpha. DIG is rolling around minus 2%. We haven't hit any targets yet. This is just 2 days old. UPW is up 11%. We've got a stop level already. URE is up 1.98. This is just literally 2 days old. UWM is minus 0.46. It's just 3 days old. It's looking like it's going to do pretty good. Let's check the 2X bearish. Pure Alpha. Biz is minus 4.64, about 5 days old. DRIP is 13%, already hit the first target. We have a stop level in place. It's doing very well. DRV is up 29%. Wow, look at that. And it's only 6-7 days old. Wow, look at that. All right, well, it's just an incredible opportunity over here for you guys. DUG is off 9%. It's still holding the trade. We're not getting out of it yet. It's only 3 days old. Like I told you, these can roll around a little bit when they first get into a trade. ERY is up 8.94%. It's already hit a target. We've got a protective stop level in place. Cold got out of a trade today. Let's go take a look at that trade, see how it turned out. It was okay, 1%. What happened here is we got out for a nice little profit at 1%. We protected our, actually that was our exit. So it grabbed a little bit, not much, but still 1%. Cold is very volatile sometimes. QID is up 3.32. SDOW is up 0.74. These are only a couple of days old, 2 days old. SDP is up 13%. It's about 6 days old. It's already grabbed half at a target. We have a stop level in place, already above our entry price. SRS is about 9 days old. Already hit a first target, up 19%. We have a stop level above or at our entry price. SRTY is minus 2%. It's been in place for about 3 days. It looks like it might be strengthening a bit. Ranking is still holding up okay. Thrust rank level is positive, so we'll see what happens here. TWM is minus 1.1%. Thrust level is positive, still holding it, only 3 days old. TZA is minus 2%. So like I said, these are still very good trades. This one you could even take right now if you wanted to, simply because you're still within the entry range. You're actually at a better price than the entry price, and you have a hard protective stop level. So you could theoretically take advantage of some of these trades that are just sitting here waffling around. Now, when you go back over to the stock list, like the core list, go to Pure Alpha, you're looking at some really, like IWM just got out of a trade, was 7%, beautiful little short trade. Now here we have IYR is up 6%, OIH is up 8%, hit the targets, only 6 days, 7 days old. Looks like it's flagging as hot. You've got TAN is up 4%, starting to finally move, thrusting downward. XLE got out of a trade just yesterday. It was a 5% target trade short. Very nice little trade. XLU is up 7%, still holding the trades, only about 6 days old. XOP is up 9%, doing quite well. It's already hit our target. We've got our stop in place, which is great. XME is up 5.89%. It's already hit our target. And remember, some of these are a little longer. This is 9/16, 9/19. So these are like 2 weeks old. This one's only 6 days old. This one's only 6 days old. This one's only about 8 days old. This one's 6 days old. And that's it. So now, like I said, they're all sitting here waiting for you. You come in here and take a look at these Pure Alpha trades. They're just sitting here waiting for you to come pick and find the right ones. And I've given you so many examples. I love them when they're 4, 5, or 6 winners of the last winners, positive over the last couple of years. Ranking is in the, let's call it the 4 to 8 or 9 range. I love it when they're set up like this. To me, these are great little trades. When you get bigger ranking like this is telling you it's got a bit more volatility. It's still a great trade. 5 to 6 of the 6 last winners, 5 of the last trades are winners over the last 6. Ranking is still positive, which is great, telling us that we have some opportunity here. But because it's 12 at 11, that means that I'm going to have about a 10 to 14% volatility, price volatility for that trade. So I have to be cautious of whether I'm able to withstand that. When I get into something that's like this, CLX, this is telling me it could be a very quick mover, 16 to 20% volatility. When I get into something that's smaller like this, man, this is telling me I've got basically 5 to 6% volatility in the trade. It's going to be a nice, consistent trade. I can plan my trade fairly efficiently with this without having to worry about too much risk. See, here's another one, CVX, same type of scenario. 4 to, say, 6% volatility. 3 of the last 6 trades were winners, so I might cut this position in half if I wanted to take it. AEP is 7 to 8. This is still acceptable range to me. 5 of the last trades are winners. You can see it's already a winner. It's doing very well, but this tells us that you've got basically a 7 to 9% volatility, price volatility in the trade that you have to be prepared for. That's what these numbers also show us. So again, come down to the Reddit list, Pure Alpha, just pick another one. 9 to 8, this is telling us, again, I would guess that you're between 8 and 10 on price volatility. You've got a $119 or $126 stock, that means that essentially I could risk $10 to $12 on this trade. And that's what it looks like here. We're already at 5.9%. We're at 119. So understand that by the time this rallies downward, we've already moved half of this range within a very short period of time. More than likely, we're going to see how this plays out. Our stop level's at 122. It's currently at 119, so we could get stopped out pretty good pretty soon, but we're already $4 into the profit on our stop. FDX, another good one, bigger volatility. So you can see here we've got a 8 to 14% price volatility. One over the last 6 trades. That means that I would probably cut this down to about 20, 25, 30% of my allocation level. We're at 8.71%, no target yet, but they're just sitting here for you. Here's another good one. Nice low volatility, 4 of 6 of the last winners. It's a $9, $10, $12 stock. So understand this is basically risking 60, 70 cents possibly. It's fairly contained, hasn't done a lot yet, but this is something where just because of these numbers, I would consider it a fairly solid trade. We're up 22%. Wow, gotta love it. We've hit our first target at 11.70. We're currently at 9.72, so we're $2 lower. Our stop's at 11.77, which is below our darn near our take profit area. So we're going to lock in potentially another 11% on this trade. And like I said, they're just sitting here. Oh, here, this one, UP just got out today. Let's take a look. Got out with a 28% profit. Gotta love it right here. Nice, nice trade. So again, come over here, get into live trades, and start taking a look at what's there. It's incredible what this system is capable of doing. You just need to spend some time looking around, finding the right opportunities, and remember to come over and watch my video and read my weekly summary, because this is very important for you to understand how we are protecting and allocating cash and what we're expecting as we're going forward every week. So this is the other value within live trades, is spend some time in here, follow my research, read, watch the videos. I'm trying to help you guys figure this out, learn how to make more money very easily. Okay, talk to you later.